Brexit is not good for us is Netherlands' fear over trade despite Amsterdam surge. Brexit is still causing concern for the Netherlands, despite Amsterdam's surge in recent weeks, as Dutch investors warn the UK's departure is not good for the country. Brexit could lead to seismic changes to Europe's finance capitals, as Amsterdam's recent surge appears to indicate. The Dutch capital overtook London as the share trading capital of Europe earlier this month, while the UK adjusts to its new life outside of the EU. The city's share trading volumes quadrupled to average £8 billion per day in January. At the same time, average volumes in London fell sharply to £7.4 billion last month. This shift comes after the EU refuses to recognize London's equivalence, meaning EU institutions are banned from trading in London post-Brexit. Prime Minister Boris Johnson and his government are hoping to regain regulatory recognition and bring European business back to Britain. However, Brexit has also sparked concern in the EU, namely the Netherlands, despite Amsterdam's recent gains. A spokesman for the Netherlands Foreign Investment Agency warned that, despite the boost, Brexit is not good for the Netherlands. Michiel Becuizen said, "Before we start becoming euphoric about this, Brexit is not good for the Netherlands. In the end, the Netherlands has lost their second trading partner." While Amsterdam has enjoyed a boost in the immediate aftermath of Brexit, some experts don't believe London will be displaced as a key financial centre in Europe. Barclays CEO Jess Starley said that UK's departure from the EU will prove to be a net benefit for the City of London. He said, "What London needs to be focused on is not Frankfurt or not Paris. It needs to be focused on New York and Singapore. There are some jobs that are going to Europe that otherwise would have been in the UK, but it's in the hundreds. Some amount of capital has moved, but London is still obviously the main centre for Barclays." Bloomberg commentator and former chief markets strategist at Haitong Securities in London, Marcus Ashworth, also highlighted that the EU still has a large stake in the city. He said, "Brussels is concerned that 3/4 of euro-denominated derivatives are traded and cleared in London, along with nearly half of euro currency trading. That's understandable. But for Europe to create its own self-sustaining market, it needs to think about what clients such as London's prized ecosystem of hedge funds want, rather than obsessing about market infrastructure, or where investment banks are opening subsidiary offices. In short, it needs to follow the money." As the row over financial services continues between the EU and UK, Andrew Bailey, Governor of the Bank of England, urged Brussels to grant equivalence to the UK in a speech earlier this month.